At the beginning of this video, I mentioned it was possible to become a millionaire following this index fund investing strategy, so let me prove it to you now using this compound interest calculator. Now, earlier on, we mentioned that the average return from the S&P 500 is about 10% annually according to NerdWallet. So we're going to be assuming that that is the return that you are experiencing, and we're going to put in a 10% return here in the estimated interest rate section. We're going to be assuming that you're investing $500 per month with no initial amount of money to start with, as most people are starting out from the $0 line. So let's say you went ahead and followed this strategy for 10 years. We're going to type in 10 under the length of time in years, and then we're going to click on the calculate button. So if you followed this strategy for 10 years, you would have a portfolio value of just under 100,000, and your contributions would be about 60,000, meaning that you've made about $35,000 in returns from the market. Now we're going to push this out to the 20-year mark and see where things are at. Now, most people would think that if you went from 10 years to 20 years, your portfolio would be worth roughly double, or about 200,000. But this is where you will see the magic of compound interest beginning to take place. So we're going to click on the calculate button, and you can see here that the portfolio would grow in value to about 343,000, which is significantly more than double what we were at before. If we take a look here, your total contributions would be 120,000, and the value is about 343,000, which means you've made about 220,000 in capital gains from the market. But you want to become a millionaire with this strategy, and the crazy thing is it only takes an additional 11 years to hit that mark with this example here. So if we scroll up here and push out to the 31-year mark and then click on the calculate button once again, you would have a portfolio worth about 1.09 million. And here's the crazy part. Your contributions were only 186,000 and your portfolio is worth over $1 million. That means that you've made about $900,000 in capital gains from the market, and you can see this red line accelerating at a faster and faster rate, and that is thanks to the compounding effect of the stock market, especially when you reinvest your dividends, and those dividends are able to earn future dividends themselves.